I will tell you everything you need to know about the ICT market maker model. I'll go from A to Z and make sure you're a professional and you know this concept fully. This is the market maker sell model and the market maker buy model. Now, guys, people charge hundreds and hundreds of dollars just to teach you these concepts. However, I'm going to teach them for absolutely free. You can also expect me to go through other concepts such as the smart money reversal and PD arrays, how to get entries on this concept and this strategy. And at the end of the video, I will show you some examples on the live market on TradingView. So let's get into the video. All right, to start off, I'm going to show you guys an overly simplified version of the market maker buy model. Now, what do you see here, guys? We have original consolidation, the sell side of the curve, smart money reversal, and the buy side of the curve. Now, sell side of the curve basically means we are respecting bearish PD arrays such as fair value gaps and order blocks. Makes it the sell side of the curve, which means we are bearish until the smart money reversal, where markets begins to go bullish, which means we are respecting bullish PD arrays such as fair value gaps. We are taking out old highs. We're returning to previous fair value gaps, previous order blocks, so on so. Now, if market is respecting bearish order flow here, we can expect market to go lower. However, once we've gotten smart money reversal, we can expect to go from the sell side into our buy model. Now, we can expect market to respect bullish order flow, where we can expect to long the market. Now, here is the sell side model in a little bit more detail. Now, this may be confusing to some of you guys. However, do not worry at all, as I will explain it for you guys perfectly. So, as I showed you guys on the simplified version, we still have the original accumulation. We have the buy side, and then we have the sell side of the curve. Now, you may be asking, what is the purpose of these accumulation zones? This is simply market engineering liquidity to instigate retail buying and selling. So for the sell model, we want to instigate retail buyers. So smart money has enough liquidity to execute their positions. Why is this? Guys, in any financial market, if I want to buy an apple, there has to be someone selling an apple. Vice versa, if I want to sell an apple, there has to be someone willing to buy an apple. So how can we use this to our advantage? As you guys know, retail traders like to trade support and resistance. We've all been taught it. So for example, support right here. Let me just draw that a bit clearer. As you guys can see, support here. What would retail traders like to do from here? They would like to long the market. They'd like to place buys. Say they put stop loss right below this low, and they're targeting a high somewhere up here. Now, guys, how can we use this to our advantage? So market comes, does not hit their take profit. However, market reverses, eventually hitting their stop loss. They placed a buy. Now they've been stopped out, so they have to end up selling their position back. This is what we call sell stops. Market has triggered their sell stop. Market engineers this sell side liquidity, so market can end up selling the market. Accumulate here to distribute right here. This is a very simple concept, guys. Accumulation, reversal, distribution, guys. The buy side model. Now, this is exactly the same as the sell side model. However, it is just flipped. As you guys can see, original consolidation, market distributes. We have one more consolidation zone here, market distributes. Another consolidation, and we have market distribute again. From here, where we get accumulation, where market accumulates, where we get into the buy side of the curve. As you guys can see, this is the sell side of the curve now. This is the buy side of the curve. We hit a higher time frame PD array, where we get a smart money reversal, and market starts to reverse. Now, you guys may be asking, how can I use these models to frame my entries? Now, right here, guys, you can see old order blocks, which we call breaker blocks. Now, as you guys can see, we have an order block. Market comes, smashes through it, and market then returns back to the order block or breaker block. Right here would be our low risk entry. We would take a long here from our breaker block, and ideally would like to pair it over fair value gap here for added confluence. So I will be showing you examples on the live chart, so make sure you guys watch to the end of the video, as I'll show you how to implement this into the live market. Now, you guys could enter from this zone right here as well. As you see, we have another breaker block, and we also have another breaker block right here. However, guys, a general rule of thumb is to draw out your Fibonacci and check where we are in premium and where we are in discount. As we are looking for buyers, it is better for us to buy in discounted zones. Now, if you guys cannot visualize what I'm talking about, let me just draw it for you guys. If we draw our Fibonacci from this high and this high, so this is our trading range, and say equilibrium is right here. Equilibrium is basically the 0.5 mark on the Fibonacci. So this is our equilibrium. Everything above is premium. Everything below is discounted. Now, we'd only want to buy in discounted zones, guys. So right here and right here. You could take this trade and it probably would work, as we are trading up to the original consolidation. However, you guys do want to stick to your discounted areas for maximum probability. Now, delving into the smart money reversal, this is definitely the lowest risk buy or sell we can take. This is the highest probability trade we can take, and it will also wield us the greatest risk to reward and highest win rate. If we do buy in here, if we do manage to catch and trade here, this is the best possible scenario. As you guys know, once we tap into the higher time frame PD array, this is when market starts to reverse. So we are able to catch the full move of the market, guys. So what are the conditions for a smart money reversal? Firstly, we want to tap into a PD array. A PD array such as old highs or lows. So if we have an old high like this, if market were to run that old high, that could be a PD array. A fair value gap or an order block, we could tap into a fair value gap, or we could tap into an order block. These are all valid PD arrays. Now, we're also looking for a market structure shift with displacement. We are looking for market to change in trend and confirm to us that we are now going to see a reversal in the near future. As for our entry, I prefer to take a fair value gap entry in our low risk buy zone. So after we've gotten our market structure shift and confirmed our bias to the upside in this example, we would want to look for a fair value gap from our displacement leg and enter off that. From there, place your long, place your limits, simply wait for the trade to hit your take profit, and boom, this strategy works like magic. I will be showing you guys on the live chart. Alright, I hope everyone is familiar with this concept now. So from here, I will be going into trading view and I will be breaking down a couple trades I've taken using this strategy. I'll be showing you guys how you can implement it into your trading and how I used it and how this strategy looks on the real market and how you can identify it. So let's get into it. Now, before I get into the video, I just want to take 30 seconds of your time to show you guys an amazing opportunity. Now, I will pass your prop firm 100% guaranteed, and there is currently a limited time Black Friday offer, guys. I will get you funded 100% guaranteed, or I will give you all your money back plus $1,000 on top for wasting your time, guys. And just to keep in mind, guys, you do not pay until after we pass your account. There is currently a huge offer for Black Friday, guys. The price will never be this low, and once you are funded, you can join our high probability signals room and copy our trades to get an easy payout. So what are you guys waiting for? Click the first link in the description and join the free Telegram group and drop me a message. Alright guys, I am on EURUSD. I am on the 45-minute time frame, and this is currently live in the market. I am not in replay mode, and you guys can see there is currently a market maker sell model going on. I'm going to break it down for you guys and show you guys all the possible entries you could have got. So to start off, we have our original consolidation marked out right here. Now I can see this is market is consolidating as market is ranging right here. You can clearly see that. Now we did let market play out, and when I did identify this is in fact a market maker sell model, is when we did tap into the PD array right here. Now guys, if I do move along here, you can see we tapped into a nice order block right here. Market has respected this order block nicely, tapped into it with barely any drawdown. So this is our smart money reversal right here. If I do drop down to a lower time frame, the 15-minute, or maybe even the 5-minute for example, you guys can begin to see in our smart money reversal there were multiple chances to buy the market, to sell the market I mean. So if I just delete a lot of these rectangles to make it less confusing, as you guys can see, we do have one breaker block right here where market was attracted to. As you can see, price is playing around in the zone where market eventually then sells off. We do get a market structure shift within our zone, which just confirms our move to the downside. Firstly here, you could have marked it from here as well. As you can see, market is clearly changing in trend from going from higher highs, higher highs, higher highs, higher highs, higher low, higher low, higher low. Where we do get that initial change in structure, as you guys can see, we're starting to form lower lows and lower lows and lower lows and higher lows I mean. So from that initial market structure shift, I see that change of structure, I see that change of momentum. I know market is now going to move bearish. In confluence with market tapping into our PD array and me knowing the market maker sell model, I know market will start to want to sell the market now. As I said earlier guys, market engineered liquidity as retail traders are placing their buy stops right here. Market is going to come take out their buy stops as their stop losses are right here. So market will take out their stop losses, use them as liquidity all the way down. This is below any significant low right here. So this low could be this low even. there is buy stops resting below all these lows. This is a basic concept of liquidity. So if I hop back onto the 45 minute, you guys can see I've marked out some nice zones, some nice breaker blocks where you could have entered from. Now this one at the bottom is quite weak as we do not have it paired with a fair value gap, and it's been mitigated quite numerous times. So as you guys can see, from this breaker block right here, it is paired with a fair value gap. If I did hop onto the 1 hour time frame, it would probably be clearer, or even the 2 hour, 3 hour. There you guys can see fair value gap, breaker block as well. Market taps into it and instantly sells off, guys. Old accumulation zones begin to become breaker blocks for market to react off of and to sell. So if I even bring up my fib tool and check out my trading range, so all the way from the bottom of our original consolidation all the way to where we tap into the PD array, this is our trading range. This is our dealing range, guys. So as you guys can see, this is our equilibrium right here. So I'm looking to short the market in anything that is premium. So anything above 0.5 is premium and everything below is discounted. Now I could mark out the multiple accumulation zones. However, I do not want to clog up my chart and make it confusing for you guys. However, you can see that is one. You can see this is one, that is one. You guys see it, you guys know the point and you understand, I would hope. So multiple entries, as I showed you guys here, you would get a lower time frame confirmation. What is one confirmation? I see an order block right here. Boom. Place your short here. Take profit above the old high at about 10 pips, which is absolutely amazing. And we could have targeted any of these zones. We could target this zone for 27 pips, or about 1 to 3. We could have targeted lower. We could have targeted all the way to the equilibrium, which market does like to react off of. And as we can see, that would have been an insane 1 to 6 trade. However, if you did not catch that initial smart money reversal, you could have caught any of these zones right here. As you guys can see, you could have caught this breaker block right here, and you could have targeted equilibrium again for a nice 1 to 3. So now I see a lot of people complicating this strategy or this concept on YouTube. So guys, it's not that difficult. Simply as original consolidation, we do get our buying leg, our buy side of the curve, where we get our smart money reversal and we enter to the sell side of the curve, guys. It is that simple. I don't want you guys overcomplicating it, guys. There's multiple ways you could frame your entries. As I showed you guys, breaker blocks, after smart money reversal, PD arrays. Alright guys, I showed you guys a market maker sell model. I'm going to show you guys a market maker buy model. Now this is a very textbook example. As you can see, original consolidation to there when we get our selling side of the curve to then where we get the buy side of the curve. Now if I do up onto the 15-minute time frame, you guys can begin to see how many opportunities there really are to place trades on a market maker buy or sell model. Now let me just get into our smart money reversal. Firstly, where we did tap into a PD array, which is our order block right here. Or you could have said that we ran this old high. That would also be valid. So as you guys can see, we did tap into a PD array. We do get a clear market structure shift. If I do hop onto the 5-minute time frame, you guys can see we do get a lovely breaker block right here where market taps into, and you could have easily framed a nice entry right here. Now stop loss below here, and wherever you want to target. If you want to target this high, I'm not sure, guys. If you want to target this high, you could have caught your guys. You could have caught a nice 1 to 2. Now, where is another zone that market reacts off of? As you guys can see, market does react off this zone right here. However, this is not as clear as day. I wouldn't expect a lot of you to catch it. However, if you did notice market tap into it, say right here, you could have hopped onto your 1-minute time frame and started to look for your entries right here. Look for a market structure shift. That's not a clean market structure shift. There, we do get a market structure shift right here. From where I would start to look for my entry. So what do I see? I see a nice level of demand right here, which I'd like to enter off of. So get triggered in here. Stop loss below right this low right here at 8 pips. Now as for targets, you could have targeted any high. So if you want to target this high, that's perfectly fine, guys, and just play the market. As you guys can see, we hit final take profit just like that. This strategy, it's not a strategy really, it's a concept. However, this concept works fantastically. Is market is constantly doing this. So There's no way you can miss it. It forms about every single day, guys. This is what market does. It is the market maker cycle, guys. It's happening so frequently. So thank you guys so much for watching. I hope you guys enjoyed the video. Make sure you check the free Telegram in the description, and I'll see you guys later.